Hey, welcome back, everybody. So this is going to be the watch list for Monday, June 23rd, and we're going to clearly have to do something very different this week than what we've been doing in the prior session. So what is going to drive the entire market is going to be the news flow around the United States bombing Iran. So while we have economic news that's going to be coming out all week long, which is what's displayed here in front of you, that kind of gets set on the back burner. So this economic news will fuel the fire to the downside or could give us a little bit of a support and a reprieve from going lower. Now, your guess is as good as mine as to where the futures are going to open here in about 6 hours. So what I would recommend that you do is watch and see where the futures open, and then tomorrow morning pre-market check your levels for the stocks that you want to trade. So I'm going to go through about a half a dozen of them with some high levels that you should be watching. But what we don't know is the market going to open down 1%, 3%, 5%, 10%. It's a total unknown. Okay. And we don't want to be catching a falling knife, and we don't want to try to be figuring out, well, where is it going to bounce? So we want to take in the data, the intel, and the real-time price action to say this is a good place for me to position. Now, volatility is going to go back up through the roof, clearly. So option premiums are going to be very expensive. They're going to be very volatile, so you probably can't stay at the money. You're going to have to go maybe 1, 2, or 3 positions out of the money. And for that, I would encourage that you definitely downsize on your overall positions. So let's just take a look at a quick economic news. So Monday, we have PMI coming out 15 minutes after the market opens, as well as existing home sales. Tuesday, some more data around home pricing, consumer confidence, and then we're going to have Chairman Powell testifying in front of the House Financial Service Committee. So again, when that happens, that will add fuel to the volatility and the instability of the market. So one thing to consider on Tuesday is, again, if you're going to trade, downsize your positions or wait for him to finish talking. Wednesday, we're going to have new home sales. And then Thursday, a lot around trade balance, jobless claims, durable good orders, GDP revisions from Q1, pending home sales. And then Friday, we're going to wrap it up with the final consumer sentiment, personal income, personal spending. So are consumers still spending? Are they cutting back? Well, with a war on the table, I would probably venture to guess that going forward, we're going to see consumers putting off large purchases. We're going to see travel definitely slowing down. So some of the things you could watch for is a dramatic reaction specifically within the airlines. We're also going to have the core PCE as well as year over year. So this week we have a ton of news, but what is going to run center stage is going to be news on Iran's response to the United States as well as Israel. So with that, I really don't want to talk about where would I take a long or a short position. What I do want you to note is what are the overall price levels that I have. Again, I would say let's open up Monday morning and say, where are we going to open? Are we going to open at 592, 586? Be aware that we have a gap below at 582, which is not insurmountable that we go through and close this gap, or if things are really bad, do we close this gap down here below at 567? So make sure you have your gaps on your charts on a daily time frame. That is what's most relevant, and that's where you'll see that they all exist. Okay, then I will take the gap off once we close it or candles start to pass through it during the open market session, or if we have a significant volume flush to the downside. So that's where we're at with SPY. Let's go ahead and take a look at QQQ. Again, I'm going to stay on the higher time frame so you can just kind of see where are my price levels. Let me go to a 1 hour. And we'll go ahead and expand this. Again, what's most important is where are we going to open? Clearly, where we closed at this 527 is no longer going to be realistic. And then we do have some room below if we start to fail this 521 all the way down into some support in the lower 500s. This 514, 515 has been a strong area. And then again, if things really go south on us, we have a huge gap below all the way here from 501 down to 491. Again, is that what I would be targeting? Not necessarily, but is it probable? Absolutely. I don't think anything is off the table because the United States has not been to war to this magnitude for, well over 20 years. Let's take a look at some of the individual names. Again, this is more for price levels above all else. I'll just stay on a higher time frame for the 4 hours so that if you decide you want to trade Apple, but as you can see, if we lose 193 or we lose 190, then definitely we're down to 186 and 183. So these are some more tangible price levels. And then this was the tariff low down here at 168. So as you can see, if we start to lose some of these levels, we have quite a ways that we can drop to the downside. Let's do the same thing with Amazon. And pull that one up. Same thing. We've been hovering over this 200. We do have a gap right here. Now, you'll note that I have a red line in the middle of the gap. And you might wonder, well, why is that, Bill? Well, they started to fill the gap in the pre-market, but then they got a really good bounce. And for me, on a pre-market, because volume is usually fairly light, I don't like to consider that in reducing the size of the gap until I actually see it move lower. So these are going to be the price levels again on Amazon, all to your right. Just kind of take a look and see where are we going to open in the pre-market on Monday? Are we going to be down here at 190? Are we going to be at 180? And then you'll be able to figure out your support and your resistance above and below. Let's take a look at Tesla. This one was gaining some really good market momentum to the upside. It would help if I put in the right ticker. There we go. Okay. So same exact thing. We moved up significantly off of the conversation or the tweets with him and Trump back here on June 5th. Market sold off hard. Has been consolidating in the zone, but where are we going to open? If we open below 272, definitely more significant weakness to the downside. Or do they hold this level for us to actually bounce? So again, figure out if you're going to trade this. Here's all my price levels. Make sure you have yours on your charts, and then you can compare directly to mine. Let's take a look at Google. Google, a lot of weakness recently. It was building a little bit of momentum, and then it's just kind of rolled over for the last couple days. But this was a very strong support zone at 165. We do have a gap below at 156 and change, down to 155. If we fail that, then definitely I think we're back down here in the 150s to the 140s, and then possibly going all the way back down here to this tariff low in the 130s. And that would be, quite a loss. But you can see that this uptrend has now been broken. So where we were trending up, we have broken it on Friday. And then clearly with what's going on, we will be heading lower. Let's take a look at Meta. Meta will probably hold out the best of all the tech stocks. Based upon from a market valuation perspective in what Zuckerberg is doing with AI. And overall, though, we do have two gaps below, again, at this 622 and then one below here at 570. So again, a lot of weakness. Would I be looking for possibly the gap fill and then hold the gap in order for them to reverse this to go higher? But look at this off the tariff low. I mean, it's just been screaming right back to the upside. This trend will most likely break on Monday. Note we have the fibs of the 786, 618, and 50 that are from the all-time high. Back down here to the tariff low. We were kind of struggling right here in this 705 range. So again, let's see where it opens Monday morning and then just chart accordingly. Okay. Microsoft has been an absolute ripper with no reprieve whatsoever. This thing has a huge gap fill down here at 424 down to looks like 396. Now, mind you, we are way above the prior pivot. And not only the prior pivot, this has made a new all-time high. So if there are going to be some people that are going to take profits, they're probably going to do it here in Microsoft. Now, what I would look for is a break below this 441. You'll note that we have all of this chop back and forth, and I really don't have any great price levels in here. The one that seems to be holding the most is going to be, looks like, right about here at this pivot high. So we can add that 431. But if they get below the 786 or we come back down here, to use it as support to possibly stabilize. And then let's just get a real quick look at the banks. The banks will be hit hard, I'm sure, Monday open on war. Clearly, they usually are. Citibank, Again, gap fill down here below to 66. Do I think Citi is going to drop 15%? I would probably hope not. But that's always going to be a target that you want to have on the chart. So here's all my price levels for Citi. If you want to trade that, JP Morgan. This one has been ripping higher back out to almost all-time highs at 279, right? So we're going to get a bit of a break. We have two small gaps on this thing. So they tend to like JP Morgan, most of all the financials, to buy it up from an overall stability perspective. They do have a dividend coming out here on July 31st, and then they're going to have earnings coming up on the 15th. So we still, looks like, have about 3 weeks out, but here's my price levels on Chase. We can add another interim price level where you can kind of see that they've reversed it and bounced us higher right around here, around 224. So I'm going to go ahead and just really, this one I probably like better, 226, where we've come down, they bought it up, they're using it as support, they bounced it again in order to move higher. Wells Fargo, another name in the financials, I think, to keep an eye on because, again, these will have relative weakness. Every time it gets down here to this 71, 72, they bounce it, right? 1 time, 2 time, 3 time. So we start to fail these levels. We do have a gap fill below here at 56, although that's probably what, about 27, 14, 21. That's almost, 27, 28% away. I don't think they're going to get that to happen. But we could definitely see some weakness in the financials and maybe looking for a bounce down here at 66 if you get it, or if you get it somewhere here at around a 69. And then the last one I'm going to look at is going to be Bank of America. Again, you could also trade the oil stocks. Oil stocks will probably come in very strong on Monday based upon, global tensions and what's going on in the Middle East. But you can see here clearly that we've been holding this level somewhere between 45 and really top of this gap fill, 42. So it's kind of a narrow range here. But do note we have this gap and then a potential bounce here at 40, but most likely I really like this one a lot better at 39. So give the market some time to open. Make sure that you're also watching your futures. Again, I'm not going to try and chart the futures right now because it would behoove me, but there's, a ton of price levels, and do note that we have a gap fill all the way down here at 5,700. So we'll want to see, does the market give up all of its growth from May and June overnight? Okay, so whether it's ES or it's going to be NQ, again, take the time, chart the levels on these. We do have a gap fill down here at 20,360. Not impossible for us to get down here in very short order once the futures market opens here again in about 6 hours. So with that, everybody, I'll update all of my levels, all of my pricing during live trading tomorrow morning at 6 a.m. Pacific Standard Time with my charts, and I will see you then. So with that, have an amazing day, and we will all talk soon. Take care.